Hello everyone, I'm Larry, your professor for financial accounting, and I want to take a few minutes to explain to you the general concepts surrounding accounts receivable and accounts payable. We're not going to go into the details of how debits and credits are recorded for accounts receivable and accounts payable. That is coming soon enough in this course. Right now, I just want to make sure that people who haven't had much experience with this in business understand the concepts of what we mean by accounts receivable and what we mean by accounts payable. And that will provide you with a good foundation for when we get to the way that things are recorded in detail in an accounting information system. To explain this, let's make pretend that I own a business, a food supply business, and that I sell to various restaurants. So I've shown here's my truck, and I've loaded up my truck for the day, and I'm taking my deliveries to 12 different customers today. And I've pulled my truck up to the first delivery of the day, one of my customers, Joe, who owns Joe's Place. This is a restaurant. Now, Joe had put in an order for $5,000 worth of food supplies with me. So I pull up the truck. It's 9:30. He's my first delivery. And I will carry into his restaurant $5,000 worth of goods, and we will put all of those goods into his storage area. And Joe, in turn, will give me a $5,000 check. It's $5,000 check. He'll pay me, and then I will go on my way to the next client. Now, at the end of the day, when I bring my truck back and I come back to the warehouse, and I go in to update my accounting records, let's look specifically at what happened with this transaction with my customer Joe, who owns Joe's Place. He gave me a $5,000 check. Well, I'm going to record in my accounting records from this, I can record that cash, the $5,000 that he paid me. Of course, I'll be depositing this in my bank account, my business's bank account. Now, what about Joe? What's he going to record? Well, he received $5,000 worth of goods, $5,000 worth of supplies. So on his records, maybe he records this as, we'll use the term supplies. We'll call the account supplies. And he records $5,000. Now, maybe he didn't call it supplies. Maybe he called it inventory or food supplies. Regardless, this is an asset account, and he's recording that he has received $5,000 worth of supplies that he now has, and I've got $5,000 worth of cash recording. Now, this is if I do business with Joe on a cash basis. But what if, instead, I do business with Joe on account? If you haven't heard that term, on account, that terminology, it means I'm granting Joe credit. Maybe I've been doing business with him for years, and I'm willing to grant him credit of up to, let's say, $10,000. And the deal is, I'm willing to deliver him these $5,000 worth of goods today. He can sign for those, but I will have a deal with him on account where he can pay me within, we'll say, how about 30 days? That will be the deal. I will expect payment from him in 30 days. So Joe will not give me the cash. I haven't received $5,000 in cash today. He did not give me a check for $5,000. I delivered the goods. I made delivery. I earned that money. But what I'm going to do is send Joe a bill. I will send him an invoice that will clearly list everything that I delivered to him and also the total sum that he owes me, which is $5,000. Due, paid to me within 30 days. Now, since if I'm doing business on account with Joe, when I return at the end of the day, I don't have a $5,000 check to record. I don't have $5,000 worth of cash. Joe has his $5,000 worth of supplies. What am I instead going to record in my accounting information system? I'm going to record this as accounts receivable. To me, these are accounts receivable of $5,000. I've earned that money, and it is coming to me within 30 days, but I don't have the cash yet. Now, Joe owes me that money, so what's he going to record for this on his books? Accounts, anybody know the term for this? Payable. He is going to record accounts payable of $5,000. To me, it's a receivable. Why? Because that $5,000, I will be receiving it within about a month. To Joe, it's a payable. He's going to have to pay me that money. But the money has not yet moved because I'm doing business on account with Joe. I'm giving him 30 days. I'm giving him credit. Now, let me ask you this. What kind of an account is accounts receivable? Where would this show up? If I put together a balance statement today, where would this show up? Under the category that is assets. Accounts receivable, we're talking an asset there. Like cash, but not quite as liquid as cash, right? Accounts receivable is an asset. How about on Joe's book? On Joe's books, accounts payable. What are accounts payable? He owes that money. That is a liability to him. Okay, so the receivable is an asset. Payable is a liability. I'm on the receiving side, so I record the asset. Joe owes me the money, so he's recorded a payable. What is going to happen within 30 days when Joe pays me? There's a day that he is going to send me the check. He's going to send me that check for $5,000. What will happen on that day? What will I do with the $5,000 receivable I recorded to Joe? If he has sent me the money, that's getting wiped that day. Now remember, this is a month later, and then I will record the cash on that day. And by the way, when Joe sends me that money, what will happen to this $5,000 payable that Joe's recorded? That will be wiped to zero. We're going to be getting into this very shortly of how this is all recorded using debits and credits. Right now, we just need everyone to understand what we mean by accounts receivable and accounts payable. Accounts receivable, it's an asset. That is money I've earned that is coming to me, but I have not yet received the cash. And accounts payable, that is money that is owed. That is a liability. Now let's take this one step further. What if Joe tells me when he places this order for $5,000 worth of goods, you know, I really need this material, Larry. I mean, it's critical to my business, but I have a cash flow problem right now. I don't have the cash available to pay you this $5,000 within 30 days. Well, what we can do is set up a more formalized agreement. I'll ask him, when do you think you can get me this payment? And he says to me, about 3 months. 3 months I ought to be able to pay it. Well, okay, I may be willing to do that, but while I'm willing to grant him credit for 30 days to get that $5,000 to me, I'm not really comfortable with him holding my $5,000 for 3 months. That's an awful long time for me to finance for free his business. So what I may ask Joe to do is to sign a note with me. And the term for that is a promissory note. What I've sketched here is the most simple, basic type of a straw man of a promissory note. If you'd like, you can do a search on the internet and take a look at some of the legal wording that would go into a full promissory note. But let's keep this simple. Joe is going to sign a promissory note. So he's going to promise to pay Larry the $5,000. This is after I've delivered him the $5,000 worth of goods. He's going to pay me the $5,000. And if he's going to be holding my money for 3 months, I'm not going to do this interest-free. I'm going to expect some interest on this. So let's just say, to keep it simple, I want him to pay me annual interest of 10% on this money that he is holding for me. And if Joe is going to sign this, here, he'll sign this at the bottom, right here. And the date of this, the date I delivered the goods, was June 1st of 2000 whatever. I'm expecting him, according to this deal, to pay me, we'll do this 3 months later, it'll be on September 1st of this year. So what this note does, Joe has signed a promissory note with me. I've delivered the $5,000 worth of goods to him. If he could have paid me within the 30 days, I would have simply just done this on account with him and billed him. But since he can't pay me for 90 days, I want some interest on this money. So I've asked him to sign the promissory note, and he's promising to pay me the $5,000 with an additional 10% annual interest, and he's going to pay that to me 3 months after I've delivered the goods, and that's going to be on September 1st of that year. Now, without getting into this too much at this point, can you tell me, on September 1st, what's the total that Joe's going to have to pay me? He's going to have to pay me the $5,000 that he owes, but what else does he owe me? He's had my money, according to this promissory note, for 3 months. I'm charging him annual 10% interest. Well, 10% of $5,000 would be $500 if he held the money for the whole year, but he's only held my money for 3 months out of 12 in a year. That's 1/4 of a year. So he's additionally going to pay me another $125 in interest on top of the $5,000 he owes me, and we'll be getting into that later on in the course. The point that we need to get out of this is that in addition to accounts receivable and accounts payable, there are also other accounts that you will see listed known as notes receivable and notes payable. Notes receivable and notes payable. If Joe signs a note with me for $5,000, instead of me recording $5,000 under accounts receivable, I will record that day notes receivable of $5,000, and Joe will record notes payable of $5,000. And again, 90 days later, 3 months later, when all of this is paid off, Joe will send me the cash that he owes me, the $5,000 plus the interest, and we will wipe my receivable and wipe my payable, and I will record the cash. And we'll show you later in the course how that's done. So you see, notes receivable and notes payable, very similar to accounts receivable and accounts payable, just a little more formal, and they typically involve some interest payment because we're talking a longer period of time that someone is holding our money. And also, maybe Joe doesn't sign the note with me. Maybe I'm not willing to extend a note to Joe. He may go to the bank, the local bank, and say, I need $5,000 to pay Larry for this delivery of goods, and Joe may instead sign a note with the bank. In that case, the bank will have a note receivable with Joe, and he'll have a note payable with the bank. So I hope that helps everyone understand the difference between accounts receivable and notes receivable. Very, very similar in accounts payable and notes payable. But when you see the word receivable, you know these things are assets. Payables, liabilities, okay? And in a couple of weeks, we'll see in much more detail how we record receivables and payables using debits and credits. I hope that helps, and good luck with your studying.